Welcome to TradingGuide.com. This is John. This report is for the 21st. Well, that about says everything. Just looking at that red developing as it continues, and NBI white leading 0%. That's the expectation, and it's exactly what happened. And it literally goes back to this beginning build back over here, which took place, well, just at the end of the year. And the magenta stayed under, but it kept fighting every time there was a critical meeting point for continuation. Bulls, the plunge protection group, as often referred to, would pop back into the scenario. But as we pointed out, that was going to start happening with the definite intention that rates are going to start having to rise simply because the market function is doing it, regardless of the Fed. And that reality setting in, and all of a sudden, when things dipped, there were some people buying it, and they just ran into people wanting to get out. And that's what happens when lower highs get made over. So we combine that with the negative readings we got around the 50% mark, and sure enough, that has led to the move to the zero. It had already done so on the NASDAQ, so it was no surprise that we get some congruency. Now, what's interesting about this is if we take a look at where we're at and draw that all the way across here, brings us all the way back into October period for price. So now we've already gone back to October range, and things continue as we suspect they would, though it seems there's some leveling out here of the magenta, and that wouldn't take much for a little bit of a turnaround. Not to mention we have orange pivoting lower. That dips below the negative 7.5, then I would think that you'd probably get some stabilization out of the configuration. But it's pretty ugly from a red DSC. As well as green, and now you're also seeing that developing the shakeout as well. So that even if there is some bounce back, you're likely to see fill going back in between, and that's typically because of that dip below the red line, just as it happened right here when Pop King expected it to come back and be retraced, which it was. What's surprising on this day was the plus 50 on the S&P, to see that 50 sell off and then to drop another 50. That's quite dramatic movement, and the kind of thing that we talked about volatility-wise that we would expect with buyers coming in thinking that they had their chance to buy the dip, and only be met with more selling and aggressive selling, no less. It really just continued to wipe it out. And you can see NASDAQ making new lows. So if we look at where the NASDAQ is, relatively speaking, we're going all the way back to the early half of October last year. So, and that was the peak of the last positive extreme. It wasn't quite positive. It was negative 2.8, slightly in the yellow category. Almost turned red. Did go red a little bit further. We'd already filled those a little while back. And, well, there's potential that when we have sell signal, that certainly is definitely a marker that we look for, but the fact that that's been filled could be interesting for some support aspects if we could see it in the readings. We've got a pivot of both magenta and yellow on the NASDAQ, and fading of white. So if that's able to continue, and likewise with that orange DSC dip, but it's got to dip a little bit more than that along with the red DSCs rising in order for it to be significant enough. Because as it is now, with the orange where it is, it's continuation, as long as it stays within that range right there. And of course, we expected the fake pump in the euro to come right back to where it is. In fact, the euro is still way high for where it should be, despite everyone talking about the dollar. But the reality is, if interest rates are forced higher just through market mechanisms, really don't have much of a choice. It's still a better place to be than the euro. And from a gold standpoint, it's going to continue to lead to gold. That'll be back and forth. On down days like this started to develop, usually you get a little sell-off, like did make a peak there in this cave. Certainly, rates eased off enough, and you would have thought that was the whole headlines for why the market was rising. But clearly not able to hold that move. And this is the nightmare scenario that is inflation, and that's oil. And no resolution and or even attempt to address dealing with those supply constraints that could literally, they could turn the spigot back on Trump era policies would drive oil right back down, but doesn't seem like there's any interest in doing that kind of thing. So, kind of self-inflicted wounds, now a year later. Bitcoin had the nice pump, so did Ethereum, but gave back half of that. It's going to give back more of it because it's all on positive extremes. We expect that to go all the way down to 42,415. And even when we look at the daily, though, there really hasn't been any improvement from a crypto standpoint when we look at the daily chart. Here was the nice pump, started right here at the 3130, all on positive extremes. Skyrocketed up, started putting in the breakdown a little bit further back here, and then finally the white NBI crosses above red. And even though you were still cyan under red within that buy configuration, it's the earliest part of where short continuation would start to build there, and you look for the magenta, the white crossing magenta, then orange as all continuations. And the fact that you still have white leading in that coming through there bodes well for fill of the positive extreme. So we'll see if we're able to continuation dive here with the orange. I think it's close, but a pivot up of that orange, I think, is almost be a certainty that you would get that move to the 0%. From a 50K standpoint, we pretty much like this similar construct here. Magenta's looking strong, and then all of a sudden white just pops its little head up right there, and the magenta then dips below yellow in that. And right here, white pops above, makes another peak, and then boom, dips underneath, and it just continues to cascade. So whether you started at the beginning of it or waited for the next nut. So the first one was right there at 45.77, then 45.67, and then 62, and so on until the actual program actually took the short at just at 60, and boom, followed it all the way. Oh geez, that's almost 100 points. 45.60 to 44.66 has been the low. So that's pretty fast action from that standpoint. Here's what it looked like. We had the nice sell-off fighting back in the pre-market, and it was pretty strong coming across, and we had the earliest beginnings of what might be developing as a short, except for I was looking at full steel reset, so I was doubtful of that one. But when the second rise came up, it was coming up in DOC spread. So this looked far more attractive. And sure enough, it was back and forth with it, but at least came to the 50%. And then white NBI started to lead, and that was the beginning of the end. We made it to the 0 point at that stage, and every little attempt was just met with more weakness. In fact, red leading on most of the upcharges after the fact on those, and when that happens, you know that you're not getting any bounce whatsoever. So that's why we finished at the lows, and beautiful, right along all of our previous algo levels that we still had there. So it's all good stuff, all within the expectations, and love that volatility. So is it over? No, I think we've just begun. This could go on for quite some time. When we look at our broader daily charts, we can squeeze back, and I'll probably do a retro on Friday for broader moves, like I talked about just last week, reviewing of the weekly and broader data to really give it a broader sense of how dramatic things can become. Not that they will, but it all depends on, this is where one mistake can cascade itself, and in this particular case, the Fed is so far behind on any kind of controls on inflation that anyone who thinks that they've got a handle on how this is going to work out, I think is just confused, because the economics just don't match. I mean, the last time you had these situations was in the late 70s. I was very young, and The only way out of it was interest rates that went through the roof, and they're talking about 3-4 hikes that didn't even get you to 1 or 2%. You're looking at double-digit inflation, despite some of their softer claims. I mean, the real world already sees it with oil and everything else. I mean, what oil is at 15% or so in a few days. So, yeah. Anyway, that's for another time. Trade well. We'll definitely talk to you later. See you on the Skype chat.